This is part 3 in the series where I'm going to be teaching my friend Josh how to become a consistently profitable trader in the stock market. Now, over the coming months, Josh will be learning my entire trading system. Essentially everything that I've learned over the past 7 years in various markets. My goal is to not only help Josh, but also help you. So if you've ever wanted to learn how to trade, we're going to be posting a new episode every Friday at 3 p.m. Eastern Standard Time. Now, the most effective way to learn with Josh is to go back and start on part 1 just so you don't miss anything. Now, Josh, trading is broken down into 3 main parts. Okay, 1 being trading psychology, 2nd being risk management, and the 3rd being technical analysis or fundamental analysis. So the actual trading itself. How are you deciding, which stocks to trade and what direction to play that stock? Does that make sense?
That makes sense.
Now, my goal with this series is to cut out all of the fluff and only teach you exactly what you need to know, because there are thousands of different ways that you can go about trading. Now, the first couple weeks are going to be spent really just diving into the basics and getting you to the point where then I can send you out on your own, give you some homework, and then we can touch base and you can actually progress throughout the week instead of just in the 1 hour when we sit down to record this video.
It's like going back to school.
Yeah,
Gonna have some homework, stuff to do.
Do you know what we're going to be working on today?
Support and resistance.
That is correct. Support and resistance. So without a foundation and a fundamental understanding of what support and resistance actually is, you're going to be lost from the start. So let's hop on inside my computer and I'll show you.
Let's get it.
All right, so let's talk about the fundamentals of support and resistance. Do you know anything about support and resistance?
So if the candles are above, one of the lines bounces off, is that...
Okay, let's just break this down. So think of support as a floor and think of resistance as a ceiling.
Okay.
I'm gonna be giving you some examples. We're gonna chart out support and resistance. I'm gonna let you chart it out, and then we'll talk about the difference between, support and resistance within a candlestick, and then support and resistance when it comes to the moving averages that we now have on our chart that we applied last week when we set up our TOS. For basics, right? You wanna think of support as an area that when price is falling, price will hit that floor and bounce off of it. In the reverse, when price is pushing to the upside,
it's that ceiling.
it hits that ceiling
back down
and comes back down. Now, based off of the time frame that you are trading on, there will be different support and resistance levels. Because we're going to be doing all of our work on the 4-hour time frame, we will just be working on the 4-hour to identify these support and resistance levels. Just know that there will be levels of support and resistance on each and every time frame. Okay, if we're on a 1-minute time frame, we're looking at the day. Okay, you can see pre-market and aftermarket. So when we're looking at a 1 minute and we can only see the day, we can look to see what was the highest price we were trading at and what was the lowest price. In this case, the highest price that ticker symbol ON was trading at today was here at 66.82. This is called a wick. So at the end of each candle, these are called wicks.
Okay.
That's a wick, and this is the body. So this is the body of a candle and that's the wick. This was the highest price ON was trading at on this day. And we can see price is currently moving right now. This is where we're trading at right now. So if we just draw out, again, under drawings, drawing tools, and then trend line, we just mark our, what is this? What level is this?
The highest.
So what is that, a support or resistance level?
Resistance.
Resistance. And then on the other hand, the lowest price that we were trading at today,
The floor, the support.
that's the support. So we can just draw that out. We've got what I would say is our daily resistance and our daily support. That is on a 1-minute time frame. So if we hop over on 4-minute time frame, you can see the candles now representing 4 hours. And then if we go over to 15-minute time frame, you'll have different support and resistances on the 15-minute. You've got the all-time high, all-time low on the 15-minute. Now, the all-time high and the all-time low, if we go back to the 4-hour, those are what I'm going to consider our strongest support or resistance levels. Some people like saying key levels. So you could have key levels within a daily time frame, a weekly time frame, but on our 4-hour, I would say the key levels are going to be that all-time high and that all-time low.
And you just use the 4-hour.
And I just use the 4-hour for all my trading. Yeah, but you can see, and just feel free to interrupt me, you can see that we're trading closer to that all-time low. So this is going to be a key level of support that we can go ahead and mark, right? Go ahead and click on the trend line drawing tool, and we've got our support level. And we've got our resistance level up here, but you can see this resistance is so far away from where we're currently trading. And if we go to drawings, drawing tools, click on this little trend line tool, you can see the green 66.59 where we're currently trading. Click and drag up to our resistance. and you can see 40.21. So we're sitting 40% off of our, what I would call an all-time high on the 4-hour time frame, or an ATH. So that's our ATH, and this is our ATL, all-time low. And we are sitting, we click and drag, 7.73, about 8% off of our ATL, so our all-time low on the 4-hour time frame. So those are our like major key support and resistance levels. Now within, we keep looking in a little closer, and we kind of zoom in further. I would say zooming into the immediate trend. So like if we look at the immediate trend, you can see obviously all of the black areas are a trading day. So if we look at say the last like week and a half, you can see the date here. This was October 20th. Now looking at the immediate trend, we'll have support and resistance levels within the immediate trend. And so obviously being aware of that ATL, we've got support at the all-time low at 61.48. But what we're going to be looking for are pushes. Now there's going to be resistance on a push and support on a pullback. And if we look at a 1 minute time frame or a 5 minute time frame, we can see resistance on a push, support on a pullback, resistance on a push, support on a pullback. You know, you kind of get the idea here.
Yeah.
So what we want to look for is, you know, this is support on a pullback, resistance on a push. We got a little resistance. Okay, pulled back, broke through resistance, pushed up. We formed some resistance in this area. As we look at the top of the wicks, right, we've got
The different
68.95.
lengths of the wicks. What does that do? Do you use anything like that?
Okay, no. So some people will trade off what's called a candlestick pattern. That's like a preconceived pattern, looking at candles and saying, hey, this candle closed and it looks like this. Like the wick is smaller than the body, or, you know, we closed 2 red candles in a row and the next one was followed by a green candle that was bigger than the previous red candle, and that means the chart's gonna go up.
Don't do that.
Nonsense.
Yeah.
That doesn't work. Okay, that's just 50-50, toss a coin. So takeaway here is there will be different support and resistance levels based on the time frame. We're going to be doing our work on the 4-hour time frame, and that is where we're going to be identifying our support and our resistance. Support and resistance, when it comes to my trading, is going to be used for when it gets to the point of saying, hey, I'm betting on the stock, whatever the stock is, to go up. Based off of where that support and resistance is sitting on the chart, well, then I can figure out this is where I'm going to be wrong and this is where I'm going to be right. Or this is where I'm going to be right and this is where I'm going to be wrong. Support and resistance is going to help me set up my trade plan to then realize or figure out really in the first place whether that is a trade that I can actually take or not, based off of many factors that we'll get into. So essentially what we want to do is look for the highs and the lows on a chart and draw our support and resistance levels. So for example, here we've got our all-time low. We know that is support. And then it looks like we're trading at 66.63 right now. We had resistance found around this area, roughly right at, let's do this, double click, edit properties. Let's see, show price on right. Save as default. Okay, if you don't have that yet, do that. So 68.96 roughly. You can see we pushed up, wasn't able to work our way up during aftermarket, and then rejected again during pre-market. And then Monday last week, again rejected. So the more tests of either support or resistance are going to further confirm that level as being, well, valid or strong or holding, however you want to say it. Say you're betting on a stock to go up and you identify a support level below.
Yep.
Well, the more tests of that support level, the better, because if you set your stop loss, and your stop loss means that if this stock trades down to this area and breaks below this price, right, whatever that price is, that is when I'm wrong. That is when I'm out of this trade, because it'll continue to fall down to that next support level. So the more tests,
the more times it bounces off either the support or resistance, either or, depending on what you're shooting
it's
for.
showing like how strong that area is.
Okay.
How strong that area is going to be acting.
That makes sense.
So when you go to set up a trade plan and say, hey, this is where I'm going to be wrong, well, it's going to help if you have more tests of that level than not, because that's just going to give you more confirmation that that level will hold. So we've got, you know, roughly 1, 2, 3, 4, let's say 4 or 5 tests of this level acting as resistance. Okay. And then, you know, the following days after, we continue trading a little lower each day. And then Friday, it looks like we did end up pushing a bit and then pulling back into today. So our next clear level of resistance, I'd say, is at 68.96. However, okay, it looks like there was a little resistance formed last Tuesday, which was then broken Friday. And then Friday's daily high at 67.87. On the 4-hour time frame, there will be a little resistance there just to keep in mind. So you'll see on each day, there'll be support and resistance levels, right, on each day. So looking at this chart, we can see, hey, there's just this clear level, right, of resistance, and then this clear support. And then we can kind of chart up and say, hey, roughly, let's see, how far above is our resistance? Okay, generally about 3%. Now, that is finding support and resistance when it comes to looking at the candlesticks. So what I want you to do is go through a couple of charts, and let's start on the 1 minute just because it's going to be a little easier. And I want you to identify our daily low and daily high and draw out either the support or the resistance level. Well, both. You can go down and look at the S&P 500, and we're going to start on the first stock, and all you have to do is hit the down arrow, and then you're going to look at today and say, hey, okay, this is our daily high, this is our resistance, and then let's find our daily low. Where's our support going to be? Okay, and this one, in this case, you can see like there's low volume. We'll get into what that means later on, but that's why the candles look very weird. There's essentially just less people trading this stock, so there's these weird gaps.
Oh.
There's these weird gaps in the price, okay? So it looks like pre-market gapped up. That looks like the lowest price at which we've been trading today. And just very roughly, briefly, right, off of the open. So we're not looking at pre-market, okay? We're just gonna look at
For the day.
On, off of the open. So go through and we'll chart out some daily support and resistance levels on the 1 minute.
So,
Okay, we got our daily high at 157. What is that? What's that called?
the resistance.
Resistance, good.
Sorry.
You're good.
And then support is down at 936.
Yep. Zoom out a little, just so we can see the full day, just to make sure. Yep, good. Awesome.
Boom.
Okay, next one.
So we're looking at 265 for the high. For the resistance.
Yep.
Around 259.
Support, good.
Support.
Yeah, so a little rally off the open. Now, once you mark that, pause on this chart.
Okay.
And let's say we're trading at right now 78.32. Let's see where our other support and resistances are going to be, because I see where we've had many tests of an area. If you zoom out a little bit more, you see this area?
Oh yeah, right here.
Look at it.
Keeps bouncing.
Keeps bouncing off that area. So in the immediate term, that is going to be our next clear level of resistance, right? Yeah. And then where's our support going to be?
Support's yeah, great.
There you go.
Right here.
Okay. So that could give you an idea for what I would call your margin for profit. So if you were to enter now, and this would be a day trade because we're on the 1 minute, you could say, hey, I'm going to go long. I'm betting on the direction of the stock to go up. I'm going to take profit if I hit 78.57, and I'm going to stop out if I hit 78.19. Does that make sense?
Yeah, that makes sense.
Or if that margin's too short, then you could say, hey, I'm going to stop out if we break the daily low at 77.98, or I'm going to take profit if we hit 79.56. All right, so let's go back to the 4-hour time frame. I think you understand.
Yeah, that makes sense. Pretty straightforward, I feel.
Now on the 4-hour, I like saying this, the cleaner and the clearer the chart, well, the easier it is going to be for us to actually identify where those areas of support and resistance are. So a choppy chart where the overall direction is unclear is going to be harder to identify where those support and resistance levels are. So 2 words you should know: trend.
Trend.
What's trend? Do you know?
It's just what's the I don't know how to explain it. I know what trend is, but like
the overall direction. So the
Okay.
direction of a stock. Now there's going to be different trends based off of either time frame you're looking at. So if you zoom out all the way, which you are right now, we could see the trend of this chart. And this one was even a little harder to identify what the trend is here, because think about it like this. If the chart is moving from the bottom left to the top right, that is what is called a bullish trend. Whereas if it's moving from the top left to the bottom right, that is a bearish trend. So bull market, market's going up; bear market, market's going down. Okay.
makes sense.
And then based off the time frame you look at, the direction is going to be headed in different ways. You can identify the trend on different time frames. I want you to look through a couple charts. I want you to try to identify a chart where the trend is very clear. So where there's not a ton of chop. Like this Netflix, very choppy. We want to find a chart that is presenting a very clear trend, where direction is very clear. And then I want you to tell me what the trend is. And then within the trend, I want you to identify the support and resistance levels. All of this on the 4-hour.
Okay.
That looks good. Okay. there we go. That's a pretty clean chart overall. So overall direction or overall trend is what in this
Down,
case?
it's bearish.
Down, bearish, good. And now within this overall trend, if we look at the last month, okay, so kind of zoom in, can we identify some areas of support and resistance? It is a little choppy. So one thing you want to keep in mind is like when we go to actually trade, well, we're not going to be even having to take into consideration in this case, like the all-time high on a chart, because that is going to be sitting so far away from where that stock is currently trading that it's never even going to come into play, or the all-time low, or another area of support or resistance. And that's why we're looking at the more immediate trend. Does that make sense?
Yeah, that makes
like
sense.
you're not, if you put on a trade and say your average hold period is going to be 3 to 5 days,
The stock's not going to go up or down 40%.
yeah, we're not even going to ever get to that next, that 5th, 6th, 7th strong area of support, 25, 30% above where we're currently trading. It won't ever come into consideration in the trade or in the trade plan when we're making that plan for the trade. Yeah, it's pretty choppy. And so,
When you zoom in more, yeah.
I won't even trade charts if it's too choppy and I can't identify where I'd set my support and resistance levels. Sometimes you just can't identify where there's clear support or resistance, and therefore you can't set like a trade plan. Again, when I say trade plan, I mean like this is where I'm going to be right, this is where I'm going to be wrong. Yeah, see, you can see a lot of charts right now because of where the overall market is sitting and like how the market's been. It's been all over the place. It's been a lot more choppy. It's a lot harder to find like very clean and clear charts where you can easily identify those, areas of support and resistance. Josh and I just wanted to quickly interrupt to mention that this series could take anywhere from 6 to 12 months. If you really want to fast track your progress, if you want to have access to essentially all of the information at once, where you could really get through what I'm going to teach Josh in a week, well, I put together a curriculum covering everything I've learned after trading over the last 7 years. That curriculum is all inside my mentorship group. And in addition to that, one of the things that I also offer as a coach and mentor, and now I've been doing this for a couple of years, is giving people the ability to essentially sit over my shoulder throughout the day and see the exact trades that I'm taking in the market. Whenever I'm putting on a position, right, I'm posting that trade to my group. I'm saying, hey, these are the option contracts that I'm buying. And then when I go to close that trade, I'm either making money or losing money. So full transparency. So I know for the people that just don't have the time to learn, or maybe you'll set aside the time to learn in the future, then being able to kind of have this direct route of making money in the stock market, well, my callouts inside the mentorship group are going to give you access to do so. There is a lot more that is included in what I offer. I'm actively coaching every day. I'm online. And so if you want to learn more, just click the first link in the description below, head over to my website, see what's included. And if you're interested, it is application only. So go ahead and fill out that application. And if you are accepted, I look forward to hopefully working with you. So now I want to talk about moving averages, because we've got these 3 moving averages on here, the 180 day, 50 day, and 15 day. And those moving averages are also going to act as support and resistance levels. I like to say that the moving average is going to be either respected or not on a chart. So if you can see that price movement, and when I say price movement, you just look at the candles. If candlesticks are trading through a moving average, that means that moving average is not being respected. In general, the 180 day is going to be acting as either the strongest support or resistance, followed by the 15-day and then the 15-day EMA being the weakest support or resistance. If price is trading, if the candles are trading above that moving average, that means that moving average is going to be acting as support.
It's going to be the floor.
It's going to be the floor. And if the candles are trading below that moving average, that means that that moving average, whatever it is, 50-day, 180-day, 15-day, is going to be acting as the resistance. And then just like looking at support and resistance when it comes to the candlesticks themselves, well, the more tests of a moving average, either acting as support or resistance, are going to help further confirm that that level is respected. That's what I like to say. So let's look through some charts and try to find a chart, identify the trend, and then look to find a chart that also has
Respects the
moving
moving
averages.
averages.
Yeah, and the moving averages are respected. Exactly.
Would this be it for this one? Because it's respecting the 180.
So the longer period of time that a moving average has been respected, the better. And remember, we talked about like knowing that, hey, if we're setting a trade plan, like realistically, maybe we'll look for a percentage to 5-6% move on the chart. But if there's an area of support or resistance that's sitting 10, 15, 20% overhead or below, whatever the case is, then we don't really need to even take that into consideration. So like example here, if we look at the immediate trend, you look at how long it has been that the 180 day has been respected on CSGP. And I would say that this chart is too choppy for me and I would just move on. I wouldn't even look at it. Can you kind of highlight so people can see? Yeah, just circle with your mouse where our areas are that we've tested and been rejected, right? Let's be a little more specific.
Here.
So here,
Here.
here,
Here.
and then right now.
Here. Well, if it broke through, then
What the market likes to do, and this is something that I'm going to say a lot, is the market likes to probe levels and shake out buyers or sellers. So think about it like this. There's so many people out there trading. So many people looking at the same chart. They could be looking at the same moving averages, same time frame. Think about where most people are going to be setting their areas of this is where I'm right, this is where I'm wrong. Someone goes short on this chart. Well, the majority of people are going to be looking to get out of that trade. That's where they're going to set their stop loss at the 180 day. But what the market likes to do is it likes to probe these areas of either support or resistance and shake people out and then retrace. And this is something we're going to talk about in more detail in the future. But that still means this area is respected. Okay.
okay.
Broke above,
Came back down.
shook people out, right? Everyone who had their stops set right there. Their stops got hit. They got out of the trade. They lost money. And now we've pulled back below the 180 day. Let's look at another chart. Let's try to find a little cleaner chart. This is a good one. Okay, so we can see if you zoom out all the way on this chart. Wow. Okay, so 48.72 is our all-time high. All-time low is 24. You can see the dates here. Okay, since July, August, about mid-August, we broke back below the 180 day. And since mid-August, we've been trading below the 180 day. So in the immediate trend, the 180 day is respected. Let's look at the 50 day SMA and you can zoom in more to see if the 50 day is respected. No, it doesn't look like the 50 day is respected. Candles are trading straight through it and the 15 day is not respected either.
So ideally what you're looking for is it's respecting all three.
Good question. So I guess this is maybe a good time to summarize like my trading as a whole. So quite simply, I'm a trend trader. So what I'm doing is I'm looking at the larger trend. Okay, in this case, a 4-hour time frame. I'm identifying what is the overall direction of that stock. And then within this 4-hour, we're using these 3 moving averages as reference points. And what I'm doing is I'm looking for patterns within that chart. I'm talking about historical patterns. Now history repeats itself. You see a stock that has formed the same price movement, price action, however you want to say it, a stock that has repeated that same pattern multiple times. Well, based off of that, I've done back testing and figured out if I look at a chart and I identify this is the trend, these are the moving averages that are respected, and the 180 day is going to be the moving average that is the main one, which I'm going to be looking at when it comes to identifying within that trend if there is a pattern. Within that pattern, is there a setup or not? And a setup, when I say setup, I'm looking for certain criteria to be checked off. And then if that criteria is checked off, well, then that is a trade that I've taken many, many times over and over. And I know the expectancy behind that.
Yeah,
and
you know what the results should be based off the history.
Yeah, we're heading in that direction, right? Over the next couple months in learning. But no, you don't need every moving average to be respected. The 15 day is the smallest time frame. Average price movement over the last 15 days. I will use that only typically as an exit, not an entry. I'll use that as an exit. The entry is going to be the overall pattern, the trend, right? Everything I just kind of referenced are going to be trade management moving averages. As in, this is where I'm going to be right or wrong.
Kind of like what
This is
you
where I'm
do
setting
with
my stop loss or take
trade
profit.
after you've already placed it.
This is all stuff that we figure out beforehand.
Okay.
Before we ever get in a trade, we want to know exactly where we're going to be wrong and where we're going to be right, and how much we're going to make if we're right and how much we're going to lose if we're wrong. And by using the 15 day and the 50 day SMA, typically it'll be those two smaller moving averages, and typically those will be the levels at which I will be wrong based off of the setups that I have. Well, that's going to help us decide, well, is the risk to reward behind this trade worth it? Is it worth taking this trade? Am I, risking as much as I should be according to my system to then make X amount? You see how we're getting into a lot here, because it's hard to answer one question without answering a whole lot of questions. And then sometimes it'll be the 180 day where I'm either going to be, if we hit that level, the 180 day based off the setup, maybe it means I'm getting out of the trade there, or maybe it means I'm taking profit there. But at the end of the day, the cleaner and the clearer the chart, the better. It's just gonna help us decide whether there's a trade there to be taken or not.
Okay.
But right now, I don't want you to get overwhelmed. We'll get to all this. I know it's a lot. I just want you to be able to identify support and resistance levels when it comes to the candles and know that, looking at a chart, being able to identify real quick, are moving averages respected or not? Does that make sense? So on this chart, I want you to draw our support and resistance in the immediate trend. When I say immediate trend, I'm talking the last 2 weeks to 1 month. That's like the immediate trend. Where's our support? Where's our resistance when it comes to the candlesticks? And where's our support? Where's our resistance when it comes to the moving averages? So it looks like, I'm not gonna say anything. Go for it.
Well, okay. Question: would it be? Because that's like slightly above. Does that matter?
That's gonna be another resistance level.
Yeah. So
Yeah.
okay. So these two would be different.
That's a daily resistance level that has, we've got one test of that. That was the highest price that JD traded on, what was that, Monday, a couple weeks ago. So there will be some resistance there. And you'll see there's many small support and resistance levels within each trend, within these patterns, right? We'll get into what I mean by pattern and what I mean by all of this later on, okay? And a lot of this is stuff that I'm gonna be repeating, reiterating, and that you're gonna continuously practice as we go along.
Okay. Okay. So this is the resist or the support, right? Because it bounced off here.
Okay, so you can see we broke because we're looking back at the past. You can see, yes, there was a little support there. For this day, there was support there. And then this day, that would still be support. And then this day, well, we broke through that support.
Okay.
And so now there's no more support there.
So it doesn't matter.
It's broken. But here, you can start your line there. I wouldn't go back through here, right? But now there is some support that was just formed, right? It just happens to line up with that last one.
Okay. Yeah. So that's once it breaks through.
So once
it's irrelevant,
yeah,
kinda.
because we're looking at the past price movement, right? How candles have moved on the chart. So if you picture, now moving forward this way, well, this is going to be our next clear support at 25.19. Our next clear resistance at 27.57, good. We've got another resistance level above at 27.91. We've got the 180 day, which has how many tests? How many times have we tested that? Or how long have we been trading below the 180 day? What we're trying to do is determine, will the 180 day SMA be acting as
So since
a resistance area? So we've been trading
since August.
below the 180 day since August. So that means that 3 months where price has yet to break back above the 180 day. We haven't had any direct tests of it. We've kind of rallied up, here. Looks like we started to work our way up, but I would say that is going to definitely be acting as a resistance level. Pretend we know a lot more than you do right now, but let's just say because of X, Y, and Z, we're going to bet on this stock going down. But where we're going to be wrong is if we break back above the 180 day and we break over it. Because then if we break above the 180 day, well, now the overall trend, the pattern has just shifted. 3 or 4 months we've been trading in a bearish trend, right? The trend's been bearish. Overall momentum has been to the downside. We can see the chart has, been forming lower lows, and lower highs is something you're gonna look at too. So a chart that has lower lows and lower highs is gonna be a bearish chart. So that's good, okay? You've identified, okay, we got these resistance levels overhead. 180 day will be acting as a resistance level as well. Our support, 25.19, small area of support. Again, these are very small areas of either support or resistance. We've got, this all-time low at 24, which we've had multiple tests of. That's going to be a really strong area of support. Good. I like it. Awesome. How are you feeling?
It's good.
I know there's a lot, and I'm going to give you some homework. And your homework is going to be to go through. This is the NASDAQ 100 that we're on right now. I want you to go through every stock over the next week. You have a week. Okay. Again, you're going to be progressing slower than someone who would say jump in the mentorship group and start taking the masterclass right away. But I'm giving you a week's worth of homework, which is really only going to take you a couple hours. Go through all the stocks in the NASDAQ 100, and I want you to go out and go to the immediate trend on the 4 hour, like we have been. Look over the last 2 to 4 weeks. Okay, what's the overall trend, overall direction, right? Bearish or bullish? Are moving averages respected? And then go about charting out your support and your resistance levels. And you got to just practice this. You will get so fast at it where you can just go through charts and see like right away. It'll become second nature to you. And so that's what I want you to practice, and anyone else. You can spend the next week practicing this.
Okay.
Good.
Let's do it.
How are you feeling so far?
Feeling good.
Awesome.
Yep. Feeling more confident.
All right. So again, if you guys are interested in gaining access to my mentorship group, the first link will be in the description below, where you can then go ahead and apply. Josh, I'm so stoked for this.
Me too. It's going to be a fun next 6-ish months.
We'll see how long it'll take, but we'll get you there. If you guys are interested in following along, again, don't forget to subscribe and smash that like button. And Josh and I will see you all in next week's episode. Later.
Peace.